This is the FlipNerd.com Expert Real Estate Investing Show, the show for real estate investors, whether you're a veteran or brand new. I'm your host, Mike Hambright, and each week I bring you a new expert guest that will share their knowledge and lessons with you. If you're excited about real estate investing, believe in personal responsibility, and taking control of your life and financial destiny, you're in the right place. This is episode number 306, and my guest today is Edwin Kelly, the CEO of Specialized IRA Services. Edwin is an expert in helping people find solutions and strategies to help plan for retirement, but also to help pay for healthcare expenses and your children's education. There's some very powerful tools that he's going to share with us today. You do not want to miss today's show, as Edwin shares some sage advice on all that's critical to your financial well-being. There's some very powerful tools that many of us are not using yet, and you're going to learn about those today. In fact, in the second half of the show, in the Taking Action segment, Edwin is going to tell us, he's actually telling us how to get started right away with maximizing your investments. Actually, some action steps. Here's what you go do today or to get started right away. So if you're a pro or elite member, you do not want to miss that part. Please help me welcome Edwin Kelly to the show. Edwin, welcome to the show.
Hey, Mike, how you doing?
Good. Glad to have you back here. And obviously, I just saw you last week at a mastermind that we're in together. So good to see you again. It hasn't been too long, but I missed you, though.
I know. It's been a couple days, man. I just don't know what to do without you.
Yeah. Well, hey, everybody. Edwin is the CEO of Specialized IRA Services and really a retirement expert of how to use retirement accounts for other things other than just real estate investing. But obviously, that's a lot of his focus is real estate investing. And so, Edwin, you're going to do a much better job of introducing yourself than me. Why don't you take a couple minutes and tell us a little bit more about you?
Sure. So by way of introduction, if you don't know me, I really got my start investing back when I was in middle school, believe it or not. And
wow.
And the kind of the funny backstory to this, Mike, is that when I was growing up, I was raised by a single mom. It was just my sister and her and I. And my mom was a social worker, didn't make a lot of money, and so she struggled financially. Didn't want to struggle financially. So what happened was I ended up doing odd jobs starting in 6th grade. And I, mow lawns, clean houses, whatever. If somebody would pay me to do something, I would do it, right? And so by the time I got to middle school, I had saved up enough money that I saved up like $1,000 and I wanted to invest it. And so I convinced my grandfather to open up what's called an UGMA account. And if people aren't familiar with that, an UGMA account is under the Uniform Gift to Minors Act. To open up a brokerage or a financial account, you have to have a custodian, right? Somebody of age to do that. So my grandfather was my custodian. So he opens up this UGMA account, I put some money in it, and I start looking for my very first investment, right? And I found it, and I was so excited about it. Now, you're going to laugh when I tell you this, but you have to remember, I was in middle school, right? This is like 7th, 8th grade time.
Hey, we make bad decisions as adults. I do.
But actually, this was actually not a bad decision.
Okay.
As it turns out. I bought a stock in a company called Chuck E. Cheese.
Oh, yeah.
All right, everybody knows Chuck E. Cheese.
Yeah.
It's the place as parents and grandparents, we love it and we hate it all at the same time, right?
Yeah. I mostly hate it. I've got to say that.
I can't tell you how many of those dry, horrible pizzas I've eaten there since I've had kids, and all the times and how much money I've given them. But so it's a place we love to hate. So the funny thing is, I bought that stock around $18 a share, and a year later, it was trading at about $42 a share. And for me, this was an eye-opener because I'm like, I made more money in 1 year investing than I did busting my butt doing these horrible odd jobs. Yeah, so absolutely. I realized the money's in the investing, right? It's not going out and working hard. And so there came a point in time I said, you know what? I said to my grandfather, Grandpa, I want to sell the stock. And he said, you know what? He said, no. And I said, what do you mean? No, I want to sell it. And he says, well, here's the thing. He says, stocks are for the long run. You don't sell it. And I said, well, look, Grandpa, I'm not going to go out and buy a toy with the money, but, it's gone up in price. And at that time, I didn't know anything about sell discipline, right? These are things you have to know and be really good at if you're going to actually do stocks and that kind of thing. Anyway, so I said, I just want to get out of it and I'll go find something else to invest in. And he says, nope, we're going to stick with it. Little known fact that a lot of people don't know. When certain public companies file bankruptcy, the courts will sometimes authorize them to wipe out all shareholders and issue new stock. to recapitalize the company.
Right.
And that's what happened in this particular case. So Chuck E.
Wow.
Cheese is around today, but I don't own any stock in the company anymore because my $18 investment that grew to $42 went to zero.
Right.
And the thing that I learned from that experience
was that in the next year, or was that like down the road?
It was shortly thereafter. Yeah.
Yeah.
I don't know why they got into trouble. Again, I don't remember. I was a kid, but they got into trouble, and I know I lost everything. It was a total loss.
Yeah.
And what I realized was, well, this is something that I had I couldn't see it coming, right? And so it was just I lost my money. And so I said, there's got to be a better way to do this. So fast forward, I spent a lot of time in investments, financial world, retirement accounts, and that's when I discovered self-directing probably about, 10, 15 years ago now.
Yeah.
I've been in investments and retirement plans for about 23 plus years. And what I saw was super exciting. It self-directed retirement investing or self-directed account investing basically allows us to eliminate taxes, defer taxes, control taxes. It allows us to invest in things that we want to invest in and know and understand, things like real estate, as you mentioned. It allows us to have complete control over our financial future and actually achieve the results that we're looking to achieve. And so that's the better way that I discovered, and I've been doing it ever since. And we teach it, we do it, we have a business around it.
Absolutely.
So that's where we're at.
I don't think I've ever told you this, Edwin, but I have a different story, but very similar kind of lesson. So I didn't start in middle school, but when I got out of college, I was a finance undergrad, and I went to work for a huge bank that managed literally, at the time I remember when they crossed like $2 trillion in assets under management. It's a huge bank. I won't say any names. Most people, it's not really a household name, so a lot of people might not even know it. But they managed retirement accounts for large companies, multi-billion-dollar accounts. Now, these are the type of accounts that you don't have any control over what you invest in. Your company offers a couple of different funds, and you invest in one of those, right? And having gone through college and being excited about the stock market and picking stocks and having some financial savvy, I was really beat down to learn that all these fund managers, I was basically kind of in an audit function, so I wasn't even on the sexy side of the business if there is one, but I would help prepare financial reports for performance. And when you start to realize that pretty much most of the asset managers, the portfolio managers, their goal is to try to beat the S&P 500, and it's like, well, and almost none of them do it consistently. So it's like, why not just invest in the S&P 500? And then, kind of from that lesson to realizing that the stock market, even today more than ever, it just feels like it's a bunch of financial engineering and you really have no control. Like, when you bought Chuck E. Cheese, it was kind of the Warren Buffett approach to buy what you know, right? But the reality is I don't think that matters anymore. I think there's so much gaming and financial engineering that's happening that's really driving the market and individual stocks that it's not the right thing to do anymore to just buy a product that you like and a company that you believe in their mission, because that has very little to do with their financial performance.
Well, and the funny thing about that is that, there's a lot of money being made in the stock market, but the money is being made in a very specific area. It's called Wall Street.
Right.
And you and I and everybody listening, we don't live and work on Wall Street. So we're not the ones making the money from the stock market. They are. Yeah. And just as a quick side note to what you shared, something that a lot of people don't know. I lived in the institutional money management world for a long time, in the investing world. And so it's a game, because it's amazing how, like you said, people are trying to beat the S&P 500. So it's interesting, you can look at the top 5 fund holdings. Well, it was always funny to me how many funds in the top 5 positions that they held, where they had most of their money invested, held the index.
Right.
they weren't adding a lot of value, to your point. They're basically buying the index, but they're able to charge a lot of fees.
Right.
And the other thing is that they report out their positions on the last day of the month. So what do they do on the last day of the month? They take cash, they go into market, then it shows invested, and then the next day they sell it, because they may not want to hold, but they can't show a bunch of cash on the records to investors, because you'd be like, why am I paying these fees if they're sitting in cash 90% of the time? Right. Well, there's a whole game around it, but this is why people just don't get ahead with those kinds of things. Yeah.
Yeah. Well, everybody, we're going to talk today about self-directed retirement accounts. And Edwin's going to share some great information with us. And for those of you that have been listening to the show for a while, we break the show into 2 parts. We're going to talk a little bit about self-directed accounts and kind of where some people fail and some challenges that people have up front. And then when we get into part 2, we're going to really kind of talk about, Edwin's going to give us some details on how to take action, a lot of people know that these are important things. What should you go do right now? What should you go do as soon as after you hear this, to start making some progress and moving forward? So Edwin, let's kind of dive into, maybe you could share some challenges that people have in this space. I mean, there's so many people that I saw something the other day that it was, I can't remember the percentage. It was like some insane percentage of people in America don't even have $1,000 in their bank account. It was, and people, if you're in that situation, you never feel free. You can't retire. You can never stop working, essentially, right? So what are some of the challenges that people have to just kind of go down that financial freedom path that everybody wants? It's time for a quick announcement. We'll be back to the show in less than 30 seconds. PassiveRental.com is your source for turnkey, done-for-you rental properties. If you'd like to be an investor and not a landlord, please visit PassiveRental.com to learn how to purchase cash-flowing, professionally managed rental properties in the hottest rental markets across the country. We can also help connect you with financing for your next property. Invest the easy way today and get started by visiting PassiveRental.com. What are some of the challenges that people have to just kind of go down that financial freedom path that everybody wants?
Well, you know what? It depends. There's three core challenges that I see that we all have. And then there's other challenges as we've worked with clients over the years that have popped up along the way that we see people get into. And we'll hopefully have some time to talk about that, because it's really cool the way that you can actually solve those problems with the strategies we're talking about. But I'd say that the three big challenges that people have fall into three things: taxes, the investments that they hold, and expensive fees and commissions. And to put that in perspective, there was a report that the Social Security Administration commissioned, and IRAs were introduced back in like 1974. So they've been around a long time. And so what Social Security said was, hey, you know what? How did this fare for people, right? Back then we said, open up an account, participate in the company sponsored plan, work, save, put the money in these mutual funds, and at the end of your life, you're going to have enough money to take care of yourself. So how did that work, right? And so they said if we take 100 people at the start of their working career and follow them to retirement for purposes of their study was age 65. They said, what happened to those 100 people? Long story short is what they found was 5 out of 100 people were considered financially secure by age 65. 95% of Americans have failed to do it. Wow. And the question is why? Well, it's because of these three challenges. So the first challenge is taxes, because a lot of people don't understand taxes. They don't understand how it impacts them. But to just give you kind of a quick scenario, if someone were to make $100,000 this year, right, you trigger federal income tax, state, local, right, depending upon where you live. You've got Social Security, you've got Medicare, you've got these taxes. And that doesn't even include hidden taxes that I'll refer to, like vehicle registrations. Yeah. Things like that, like they're just nickel and dime. Go to the gas pump. This is one reason why I like electric cars. This is why I like the Tesla, because I don't like giving my money to the government or countries that hate us. And basically, that's the two places that money goes when we buy gas. Yeah. Right? So I don't like doing that. So taxes are a huge problem. And so to put that in perspective, if somebody makes $100,000 a year, they could be paying $42,000 a year into these various taxing agencies.
Yeah, easily.
And so think about how different your life would look if you could keep the $42,000 that you're now giving away. And that has a crippling effect on somebody's ability to create wealth. A second challenge is the type of investments that people are doing. So just like me, starting out with Chuck E. Cheese, what most people are doing, when I say most people, 97% or better of Americans who have retirement accounts are investing in mutual funds. And the reality of it is that that's why people aren't able to retire. That's why we see people who should be retired working at Walmart and greeting us at the door, because they don't have income coming in. And to put it in perspective, in 2015, 70% of all stock market investors lost money. The Dow had its worst year since 2008, and everybody's been predicting basically a repeat of 2015 and 2016. And because of that volatility, it's unpredictable. People just don't know what to do with their investments. Like it's just not performing. And then the third challenge and the way that works is if you think about, okay, so people are getting taxed, they're making investments that are sometimes making money and then sometimes not, taking away the gains. They're paying fees, pretty exorbitant fees. Now, nobody knows what they pay for the retirement accounts because it's not on their statement. But there's research organizations out there. One is called the ICI, the Investment Company Institute. And what they say is that the average person pays about 150 basis points or 1.5% on their assets. So if you had a $100,000 retirement account as an example at a traditional financial institution, you could pay $1,500 a year in fees. right?
Whether your account's making money or not.
Whether you make money or not, you're paying $1,500 a year in fees, right? Or whatever their percentage is. I mean, we've seen it as high as 2.5%, believe it or not. But 1.5%, I would say, is a fair average. Some are lower, some are higher. But 1.5% is about a fair average. And so when you layer in expensive fees and loads, the volatility and unpredictability of the stock market, and then people get the hell taxed out of them. This is what's creating the problem, and this is why people can't get ahead. And it's not their fault because they don't know what to do. They don't know that there's an alternative, but there is.
Yeah. It's interesting in the real estate space. I mean, I know that with self-directed IRAs, there's been, in my opinion, so I've really only been an investor for about 8 years, but it feels like the last several years, there's so much more awareness of self-directed accounts than there have been, largely because of, you and people that are in your industry. But if I'm guessing outside of the real estate realm, it's, a small single digit of people that really understand this is a possibility.
Yeah, people are largely unaware, right? Sometimes when I go out, I'll talk about the secret of self-directing, and the reason why I call it a secret is it is a secret for most people. They're not aware of it. They haven't heard of it. If they have heard something about it, they ask their financial advisor about it, and they say, "Oh no, you can't do that." So people are largely in the dark when it comes to what's actually possible and what you're able to do with these types of strategies.
Yeah. Do you want to maybe take a couple minutes, Edwin, and talk about, because I think a lot of, even inside of self-directed, when people start to understand, I can do this, I can invest in real estate, I can invest in other things and have more control over where my investments are going, then there's still, I don't want to say complexity, but there's a lot of confusion that there are the kind of long-term accounts, there are health savings accounts, there are Coverdale accounts for your children's education, and there's a whole bunch of things you can do. And in fact, there's really no restriction on why you can't do them all, I assume, right? I mean, there's nothing there might be some technical reasons why you can invest in one account and not another, but typically you can do pretty much all those things, right?
Yeah, and you'll hear me, I'll intermingle words, from accounts to strategies to solutions. Yeah. And the reason why is because if there's an account created, it was designed to accomplish a specific solution, right, to solve a problem. So accounts fall into 3 different categories. So one is what we call IRAs, or individual retirement accounts.
Yep.
Second category is it'll have a couple kind of headlines, if you will. One would be small business retirement plans or company-sponsored plans. SEPs, simples, individual or solo 401ks.
Okay.
And then you have what we call tax advantage savings accounts, which under that category you have education savings accounts and health savings accounts. So the first 2 categories are designed primarily to solve the problem of, I want to stop working at some point in time and I want to have income coming in.
Right.
That's what retirement is all about. I call it wealth without work because that's basically what retirement is, right? Yeah. We get the income, we maintain or enhance our lifestyle. We just don't have to earn it anymore.
Yeah. Well, you earned it by working hard up front.
You worked hard, you saved, you invested smartly, you right. created a cash flow that comes out that's very predictable and consistent. So you earned it before, you're spending it and enjoying it now, and so there's that transition that takes place. If you look at the tax advantage savings accounts, like a health savings account as an example, that is designed to handle the challenge of healthcare, meaning healthcare costs money, right? Medicine, treatment, procedures, doctors, it all costs money. So how do we get the best possible care and get the care we want and we choose and use the lowest dollar amount to be able to accomplish that with, if that makes sense. Education. I can't tell you how many people I've seen who have derailed their own retirement because their kids go to college or vocational school. They don't have the money, so they take money out of the retirement account to fund the kids' education, so they're not racking up $100,000 in debt, right, and walking out of college with a mortgage without owning any real estate effectively.
Right.
But what they just did was they cost themselves their retirement, because now they got to go back and rebuild. So every account is actually a solution to a problem. It's just you have to know how to use it. That's really the trick of it all.
Yeah.
And that's the magic. And so that's really what we specialize in, actually.
Yeah. And I know I want to kind of mention to folks, Edwin we talked ahead of time. He's offered I think with a lot of self-directed IRA companies, they don't necessarily guide you on what to do. They don't really talk a lot about what are your issues and let's help solve your problems. It's more of just transactional type stuff. And I know that Edwin and his team have really built a consultative approach, and so they really have a great system there, because I think a lot of people need their handheld. That's why we're talking about these things today. These are really important things. So Edwin has actually offered a consultation, a really great opportunity for our listeners on FlipNerd. So we put together a link. It's actually flipnerd.com/IRA. So we talked about, they're not all retirement accounts. They might be health savings accounts or other things, but flipnerd.com/IRA. So check that out and you'll learn more about what specialized IRA services can do for you. So just a little side note there. Well, Edwin, today, I know in the back half of the show, we're going to talk more about kind of process for where people go from here. I just want to take a couple more minutes in this first segment of the show, and we actually have a question. So we started asking our listeners for questions. And by the way, if you want your questions answered on our shows, you can actually either tweet or post them on Facebook and use hashtag FlipNerd, or you can email them to questions@flipnerd.com. But today's question comes from Hannah A on Twitter. And her question is, I haven't prepared you for this. I told you there was going to be a question, but I wouldn't tell you what it was.
I'm on the spot.
And it's kind of along the line of what can you do or what can you not do, is what can I not do with real estate deals in my health savings account? What are some things you can't do?
Well, really the big thing that you cannot do with a real estate deal inside of your health savings account is buy a piece of real estate you own already. So in other words, if you want to set up a health savings account, and here's a really cool strategy, and we've actually had clients implement this, and we've educated people on this. So let me give you a scenario, and this will help answer that question. You establish a health saving account, you can contribute to that account. The nice thing about it is that every dollar you deposit in that account, you get 100% tax deduction on. Okay, no matter how high your income is, it is a true tax deduction to you. You take that money in that account, and let's say you go out and buy a property, and we'll have clients actually buy turnkey rental properties inside of that HSA. That rental property spins off rental income every month, right? $600 to $800 on average is probably what we see coming back to the account. Then when you go to the doctor and you have a bill that you're going to pay the doctor, where does the money come from? Well, it can come from your HSA. But where's the money in the HSA coming from? Well, it's coming from the rents, right? So effectively, you have a piece of real estate, an asset inside that HSA account that is spitting off consistent income. So whenever you go to the doctor, when your kids need braces, right? You need LASIK surgery, the money is there. You're not paying for it anymore, right? Your investment is actually providing the income for that. That works. But as an example, if a client said, hey, I already own a piece of rental property, and I want to take my own personal rental property and put it in that HSA account. That would be an example of something that cannot be done because of rules and regs in place. So can you buy a new investment property in your HSA? Yes. Can you take an existing property you already own and put it in your HSA? No. That would be the distinction.
I see. Awesome. That's great. And one thing on your example there, correct me if I'm wrong. So if you use a Roth self-directed IRA or solo 401k, if it's a Roth variety, then those rents and things that you're receiving to kind of pad your account are all tax-free, right?
Yeah, so that's the really cool thing about it is that the HSA is a tax-protected environment. All these that's one of the cool things about it. All these accounts we're talking about are tax-protected, meaning when your investments generate income or gains back to that account, you don't pay any taxes on it that year. The nice thing about the HSA is that you got a tax deduction going in. Well, what happens when you take the money to spend on qualified medical expenses? Well, guess what? You don't pay any taxes on that. It spends like what we call a Roth IRA, tax.
Right. So a health savings account is unique in that regard to where it's kind of tax free whether it's a Roth or not, right? Right.
So the HSA. So people are sometimes familiar with traditional IRAs, which are tax deferred. You get a deduction this year. You pay taxes when you spend money.
Right.
Roth IRA, you put the money in after tax, but you never have to pay tax again when you spend it. With the HSA, it's the only account where they married the two tax benefits of Roth and traditional together in one account. So you get the deduction going in, you get tax protected growth on all your income and gains, and then you get to spend all that money tax free on medical expenses.
Yeah.
And so it's one of the most powerful accounts that the government has actually given us. And it's one of the most underutilized accounts because, again, people don't understand how to make it work for them. They don't understand the benefits.
Yeah. And I know from just, I talk to a lot of people just like you do. And I know that there's some complexity around there. So folks are listening. We're about to jump into the second part of the show here, the Taking Action segment. But again, if you go to flipner.com/IRA, you can talk to Edwin or a member of his team, and they can help hold your hand through the stuff. It's fairly complicated the first time you go through, and that's why you need somebody there to help you out. So, Edwin, are you ready to jump into tell us how to take action today? Thanks for joining us up to this point in the show. The second half of our show is restricted to only FlipNerd Pro and Elite members and only accessible on flipnerd.com. If you're not a Pro or Elite member yet, you can upgrade your account in about 1 minute by visiting flipnerd.com/upgrade. Depending on membership level, you'll get access to off-market properties real time, including real-time email and text alerts for new properties listed in your market. You'll get access to hundreds of full-length expert interviews, and Elite members get access to the FlipNerd Lab, which includes detailed masterclass trainings, 2 live webinars a month where you can interact with the leaders in the industry, and access to our Elite Mastermind group, where you can interact with hundreds of the top real estate investors in America. Build relationships with those that are actually operating successful real estate investing businesses. By visiting flipnerd.com/upgrade, you'll learn much more about our membership options. And once you've upgraded your membership, come on back and listen to the rest of this show. Wish you could watch or listen to more flipnerd.com shows? You can. As a premium member, you can get access to the full length of hundreds of past shows at flipnerd.com/shows. Or hear us on iTunes, Stitcher Radio, or Google Play. While you're there, please subscribe so you don't miss another episode. And if you like what you hear, we'd really love a positive review. It's the ultimate high five for us. Show us some love by subscribing and giving us a great review today.